Cannabis Capital Markets Conference here in Frankfurt. And yeah, but the day is nearing to the end. Last but not least, we have a fantastic company here, the Green Organic Dutchman. And with me here is Danny Brody, who is who is responsible manager for investor relations. Danny, welcome.
Thank you. Thank you for having me.
Yeah, great to have you here. Even it's late now in the evening, but thanks for taking the time. Really highly appreciate it. I met Brian Ethates 2-3 weeks ago.
Yep.
Had an interesting conversation. I really like your company a lot, and it looks like that you are doing a lot of things right. Yeah. So maybe you can summarize shortly 4 or 5 sentences what your company is doing.
Yeah, you bet. So the Green Organic Dutchman is a completely organic cannabis company. Mm-hmm. That's what our differentiated business plan started off of. It started with cannabis as a base ingredient. You're growing this organic product, and our vision for the company is to take that organic product and convert it to a multitude of different higher margin products as you go up that value chain. So right now we're operating in Ontario. We've got a facility we're building in Quebec. We're now going global as well because Canada is a great place to live, but there's only 38 million people there. So we want to start going to other areas around the world like Germany, like Europe, where there's 750 million people here. You look at our property, at our acquisition in Jamaica, we own 50% of a Jamaican company called Epican. We just went into Mexico. We're all over Europe now with our Hemp Poland acquisition, and we've also got a JV in Denmark. So TGOD, although we started in Canada, we're really a global focused company right now. We've got a funded capacity in excess of 170,000 kilograms for Canadian and international markets. And now we've raised about $460 million to completely fund all of our domestic operations, our international plans, and taking over the entire organic vertical of the cannabis market.
Fantastic. And TGOD is the symbol also and the stock exchange. You are listed in Toronto, right?
Yep, on the TSX. We're on the premier stock exchange for cannabis companies in the world, the TSX. TGOD is the symbol.
Yeah, perfect.
TGOD.
Super. $460 million. That's raised. That's really a lot. And I think you got a very prominent partner also in one of those raises, right?
We do have a prominent partner. Aside from myself, of course. I'm just kidding. Aurora Cannabis. Aurora's been a tremendous partner for us to date. They invested $78 million into our company between our private round at $1.65 and then our IPO at $3.65. But what they really have done for us is become a strategic partner in the sense that they've just gone and built Aurora Sky. They've gone and built this 800,000 square foot facility at the Edmonton airport with the exact same greenhouse engineer and designer, hybrid facilities. These are some of the most state-of-the-art construction, design, engineering facilities built specifically for cannabis. They're doing one on the Edmonton airport. They've just finished it, and they're helping us build ours in Quebec right now. So we get all the expertise, the knowledge, and the know-how from them just having gone out and built this all for our company. So it's not just an investment from Aurora, although their investment is worth about $500 million now. So I think they're happy with it.
They've done well, I would say, yes.
Yeah, but it goes a lot deeper than that. They've really helped all aspects of our business.
Fantastic. So that means you get also technical support from that, maybe also intellectual property support on that, which is fantastic because it's always good to build big things in a team, I would say. Can you give us a bit more of an insight organic and why this is such a competitive advantage and what you do different, I would say?
Absolutely. So I'm going to start this by saying Aurora could have invested that $78 million into building one of their own facilities. Yeah. It would have got them a heck of a long way along the line. But they didn't. They came and invested that money into TGOD. And the reason they did that is for the organic IP that we've developed. It's too difficult to replicate on their own what we've been able to create ourselves. So for Aurora coming to acquire a percent interest in another company, it had to have a big differentiating factor. So for us, it was organic. And organic is in everything that we do from the soil up. And, it's even in our name, the Green Organic Dutchman. But growing organic is interesting because it's recognized as a brand in itself all around the world. If we went to, anywhere in Germany, a lot of people in Germany love organic.
Biological, yes.
Exactly. So it's a brand in itself. And it's not the choice between two different products. But because it's not the choice between product A or product B, but it's a lifestyle choice. And consumers today, you see it in Germany, are willing to pay a premium price for that lifestyle choice.
A much better product also,
Higher quality product. So for us, we get a 34% premium on that cannabis. And you get a higher demand. The recreational market says there's a poll done in Canada for 6,000 people. They said 43% prefer an organic product. medical market, 59% prefer an organic product. So you have all these guys that prefer, these customers and patients that want it, but there's only 3 certified cannabis companies that are growing organic.
No, they can never satisfy everything, right?
That's where we come in. With the scale that we're growing, we will satisfy that demand. And our business plan is revolved around the point that we're not going to compete with Canopy and Aurora to grow in 5, 6, 7 million square feet to grow 500,000 kilograms of cannabis. We want to own that entire vertical channel of the organic section. We want to be on the side as organic orange juice, owning that whole market.
Yes. Fantastic. Okay, so how do you want to achieve that? Because you said 2019 you will be then really in production. So how does it work?
Great question. So we've spent the last 2.5 years perfecting our grow methodology in our existing facility now, and we're going to transfer all of that IP and all of that knowledge into our new facilities when they start coming online in Q1 of next year. So we're having 150,000 square feet come online in Q1 at our Hamilton property, and then we're going to have just over 1.1 million square feet come online starting in Q2, and then we're going to phase the production up and ramp it up as we go throughout the year. So we're starting with 200 patients in January. We're inviting 200 patients to come and become part of the Founders Club. These are investors that helped fund everything that we've put together and built. They're coming in to help us. We want them to experience our product for the first time as kind of a thank you for that. And then, like I said, we're going to ramp up our production throughout the year, exiting 2019 with a run rate of about 156,000 kilograms. All for the medical markets and the recreational markets and exporting. So we're excited to ramp up. But I mean, when you start looking at those numbers, 170,000 kilograms.
That's a lot.
That's a big number. So, I mean, we're, at $8 a gram, it's well over $1 billion in potential revenue.
Yeah.
But
what is the potential margin?
The potential margin, I mean, absolutely.
Finally, you need to make money, right?
You have to make money. So it's been a long road getting going, making sure that everything's lined up and we're doing things properly. But we're going to be making cash flow starting in January, February of next year. So it's been a lot of fundraising and a lot of work gone into making this company what it is today, and we're finally at that point where we're ready to start selling to the market.
Fantastic. Fundraising, it's one of the keywords, but who are the owners of the company? Who are your shareholders? How much has management also?
So
we know, big chunk already.
Yeah, I mean, we started out with a kind of a vision to try and do things a little bit differently, and we actually said no to the institutional investors in the early days. We didn't see value in that in the beginning. We see value in it now as we're about to generate cash flow. But in the beginning, we set out to raise money through all retail investors. And the reason we did that is because retail investors can provide so much value for us. They can become patients of the medical market.
Of course.
Customers of the recreational market.
Yeah.
Brand ambassadors. So ultimately, that was a big part of our marketing strategy was having this retail first priority in our company. So right now, we've got about 5,000 private investors that came in before our IPO. So our retail strategy, definitely worked on that front. We were able to raise $160 million privately. And management owns, I'd have to say off the top of my head, it's going to be around 20% right now after raising $460 million. So that's a significant stake.
Big chunk still.
Very aligned with investors, very aligned with the company. So we want to make sure that, we're investors in the company. We've put millions of our own dollars into the company to get it off the ground.
So you're fully aligned with all the other investors. Very simple.
Exactly.
Yeah. Super.
This company is owned by us. It's owned by shareholders.
Super. So let's assume a little bit further in the future. Let's assume you really make money. You have a real net profit. Could you imagine to pay dividends? Because this is such a long-term sustainable business, what you are doing.
I'd like to. It's tough to say because it's such a new industry.
Not from now. It's just an idea. Could you imagine?
Yes, I could imagine. However, I'm going to say no.
Too.
I'm going to say no because I would rather see our company reinvest their dollars, reinvest the money that we make into growing even bigger, kind of like the Amazon model. All the positive cash flow just gets reinvested in the business, business, because Canada's it's the beginning of all this, but it's by no means where we're going to finish. And we need to be reinvesting all of the dollars that we have into Latin America, into Europe, into Australia, into all these countries around the world. If we really want to continue having this commanding lead in the cannabis market. So yes, ultimately, once we mature as an industry, but probably for the next at least 5 to 6 years, I'd prefer to see
the growth
on
is more the
our
focus.
company is to reinvest more.
Yeah. Okay, super. Can you maybe elaborate a little bit more, let's say, on the midterm strategy, let's call it to conquer the world a bit, meaning your internationalization?
Absolutely. This is my favorite subject. And I said it once, I'm going to just drive this one home one more time. But Canada is a great place to live, but there's only 38 million people.
Yeah. It's not enough.
It's not enough. So our entire strategy, and the other aspect of it as well, it's not just population, but it's the worst kept secret in the cannabis market, where we've got this situation happening where we're going to have an oversupply. 2-3 years out, we're going to have a serious oversupply. So companies that are trading at premium values like Afria, Canopy, Aurora, all have massive international plans. And we've been working on ours for over 2 years now. We've got a team of 10 guys. All they do on the corporate development side is look at every single legal market around the world, and they've talked to every single legal company around the world in different jurisdictions. So right now, what we're trying to do is set up two things. One, we want to set up distribution channels, and two, we want to acquire companies. So for the distribution channels, we just did a joint venture in Mexico, which has the potential to reach over 7,600 retailers. 7,600. That's a fantastic strategy for Mexico. We partner with one of the biggest distributors there. For Germany and for Europe, we've just bought a company called Hemp Poland. They're selling into 700 stores right now, and it's in 13 countries across Europe.
Wow.
And it's all hemp-derived CBD, CBD products. So we can use that as a gateway into all these European countries. Once it's legalized, you get a medical market, you can unveil different distribution strategies there. You get maybe a recreational market 2-3 years down the road. We've already got distribution lined up. So we're buying companies and we're lining up distribution every single area around the world that we think is going to be valuable going forward.
Yeah, fantastic. And then you are feeding your, let's say, your internationalization out of Canada, meaning you are exporting the products, or longer term, you also want to plant cannabis in Poland, in Germany, in wherever you are going to?
Well, we do not want to grow in millions of square feet in all different areas around the world, because the facilities that we're building are $180 to $220 million. So we do not want to plant them down all around the world. What we do want to do is we've got our domestic production lined up in Canada. We've got that set up. We can export to any country that we have an import license to. But what we're also doing is, let's take a look at our Jamaica joint venture for our Jamaica partnership. We own 50% of a company called Epican, and they're a completely vertically integrated Jamaican cannabis company. We can produce there on approximately 14,000 kilograms, which is coming online by the end of 2018, for approximately 21 cents.
Wow.
So that's going to be a
gram,
big portion per gram. That's going to be a big percentage of what we want to. That's way too much cannabis for the Jamaican market. But Jamaica is pretty close to Mexico. Maybe we'll export to Mexico. Maybe we'll take that product and export to other countries around the world.
Fantastic.
Canada is going to be big for our European export, because all of our facilities in Canada are built to EGMP standards. We can export that. Jamaica is going to be good for Latin America.
Fantastic. So you have the highest product quality control levels. Yeah, you have a top product, right? And this is why you are able really to fulfill all the standards in the future, also internationally.
It's a big component of it. You have to have facilities designed not just to LEED certification, but to GMP standards as well. If you want to have any sort of future plan to export, you have to build to GMP standards. And it's more than that. It comes down to creating a facility, and these are all purpose built. Remember, this is specifically for cannabis. It's some of the most expensive, highest quality cannabis facilities on the planet. And the technology that goes into them, the automated controls, the humidity, the environmental controls, the benches moving to the people instead of people moving around to the benches, the conveyor belts, the robotics, all of it is to create this efficient, high-quality cannabis product where you can completely control and measure the environment to come up with that high-quality cannabis product that's organic. And my last point here is, in a world where margin matters, where we're price-sensitive and you're going to have margin compression happen, you need to be focused on a high-quality product, being organic, and produced for the lowest possible price.
Absolutely. That's exactly key to success, I would say. Last question. I saw in your presentation also a aspect of beverages. What might be the future touch point for you guys?
Beverages, I feel, are going to be the place where we start to get mass-scale recreational adoption. They did a poll in Canada. They said, if you've never smoked cannabis, what's the likelihood that you're going to smoke it just because it's legalized. Do you know what percentage it was?
No.
16. So very small percentage. Okay. I think what's going to happen is when we can start to measure cannabis in products, more like a glass of wine or a beer. You can measure the onset, and I know we like our beer in Germany.
That's right.
You can measure.
We have the German Reinheitsgebot. Be careful.
Yes.
It can only be organic.
Yes, 100%. So you can measure that the onset of a beer, you can measure the peak of it, and then the offset. So once you can replicate that with cannabis, without a weird bitter taste, without a strange scent, without a weird flavor, once you can replicate that consistently, and you know what the effect is going to be, and you know what the desired effect will be on the body, once you can do that, that's where we're going to get mass scale adoption, and that's exactly what we're working on the beverage side. To do that, we've hired one of the best consumer products and consumer packaged goods teams. Our beverage science team, we've got 9 members on it. They're one of the best teams in the industry. And on the consumer products and consumer packaged goods side, I mean, just look at our CEO. He spent 25 years at Procter & Gamble. Our president was 10 years at COT. Our VP of marketing and VP of sales and VP of operations are all from COT. COT is one of the largest beverage companies in the world. So we're pulling talent from areas where we feel cannabis isn't necessarily today, but where it's going. You know, it sounds cheesy, but where it's going tomorrow.
No, it is, yeah.
So we want to have a team that's got all of the experience and the skills in the beverage industry, in the consumer products industry, in the consumer packaged goods industry, and then we use it as an ingredient.
Fantastic. Well, I think that's like a fantastic game plan. I like your organic approach, really, because I think this is something that you can play the markets with a much higher margin for the future. And I would say all the best to you. And of course, to Brian, say hello, please, to him.
I will.
And I'm pretty sure we meet us quite soon in the future. And we want to get an update from you guys. All the best.
I'll be here. Thank you for having me.
Thank you. Yeah, ladies and gentlemen, it was Danny Brody from the Green Organic Dutchman. He's responsible for investor relations, and you heard it, organic, meaning biological, real stuff, real growing plants here is key to the success for their strategy. They have Aurora as a very prominent investor, and I think this tells you a lot with the confidence into the company. And also, I think their approach is quite fine. Next year, they're really going to start. They really hit the road very hard with production. They are already internationalizing. And what he said with 21 cents per gram production in Jamaica, I think it was, I mean, that is an outstanding, really multi-competition advantage, I would call it. And so from that side, check out the company. Thanks for watching us. That was TGOD. That was Jochen Staiger for you from Frankfurt. Thanks and bye-bye.
Thank you.